Hey everybody, it's Braden here from Royal LePage Little Oak Realty. Welcome to my housing market update. We're a little late in the month here. That is okay. We're going to be reviewing the numbers from August and also some recent events surrounding the economy, inflation, interest rates, etc. You know the drill. Anyways, let's hop right into things here. Buyers went out as declining prices and rising inventory dominate the market. Yes, we are currently in a buyer's market, and it is probably the slowest that it's been in a decade or more, possibly even 2 decades. Things are pretty slow right now, but there are some positive signs. So let's hop into things a little bit here. Month over month, some pretty big declines. New listings were down 20%, sales were down 20%, inventory also down by 2%. Where are we compared to the 10-year average? Well, it's a little more of the same. You know, that's still that same slow market. Inventory levels 55% above normal, sales 40% below normal, and new listings, although they're down, still up by 8% compared to that 10-year average. So these numbers are starting to change a little bit. Sales were lower. I think they were closer to 50%, even getting closer to 60%. Inventory, I think at its highest point was 60%. So there is some easing of these numbers here, which is a positive sign, but let's be honest, things are still pretty darn slow. Here is some news to keep tabs on. Things that I am thinking about right now, and you should probably be thinking about too. Are we in a recession in Canada? So in the second quarter of this year, there was a 1.6% contraction in the economy, which is huge. So I think this struck fear in a lot of the hearts of investors and financial folks. It does seem to imply that we are either in a recession now or one is coming soon. But based off of my reading, other predictions are more optimistic. And the reason why they are is because these financial experts think that the government is going to start firing up the money printers. Next year, Canada, USA new rate cutting cycle. We did have a quarter point cut from the Fed. They see probably 2 more cuts in 2025, and we did see that quarter point cut from the Bank of Canada. They see likely 2 more cuts there as well. So I think this rate cutting cycle will hopefully blow a little bit of hot air into the economy and encourage people to start investing money and free up money and get that moving again. Prices. What is going on with prices? So they have been slowly coming down, and they are now at par with the last low point, which was January 2023. So I have a couple slides more. I'm going to show you some graphs here that I hope you find interesting. But prices have slowly been coming down in aggregate, and now they're at par with that last low point. Also, I would say within the past probably 5 or 6 months, condos are performing the poorest. I think they lost like 5% in price in the past, 5 or 6 months. I'll hop into my next slides here with these charts. So as you can see, this is aggregate. So this is detached homes and attached homes. And you can see here, see this last data point? It's basically at par with the last low point after we saw that huge decline in prices and prices bottomed out. We are now at par with that. So over the past 3 years, it's just been a slow decline in aggregate. And finally, you can see here we have apartments, and apartments have been suffering from high supply levels, low levels of demand, a lack of investor purchases because many investors are simply not buying, especially in pre-sale and new construction. And that has resulted in some of the steepest declines that we've seen since March of any of the property subtypes. And you can see that here with the steepness of this line. Anyways, thank you so much for hanging out with me. I really appreciate you watching if you made it to this point. And if you have any questions for me whatsoever, please don't hesitate to reach out. Thanks so much. Bye now.